Hey guys, it's Dennis again. I'm here again with my girlfriend.
Hello.
So I remember last time we recorded a video together, you had just gotten out of an exam. You're telling me like you weren't feeling good after the exam.
Yes, I'm a nursing student, by the way, so just stressed out all the time.
Yeah, so you just looked dead in that last video.
Yeah, and I wasn't even talking.
So
I'll talk more this time, but yeah.
Okay, so welcome her back. So in this video, I kind of want to take a different approach to YouTube finance. And I feel like my channel is kind of like taking a different approach compared to other channels in general.
Yeah.
With this video, I have someone who does not know much about stocks.
Yeah.
Right. And I kind of want to pitch her like two stock ideas, right? One of them I'm currently invested in, CROX. And the other stock is one that I'm not currently invested in, SBUX. And I kind of want to just talk to her about these companies and kind of like show her like investing is not so linear where you just say, oh, I'm going to buy this stock and I'm going to short this stock, right? There's quite a bit of nuance, which is why everybody disagrees with each other. And I think that's a beautiful thing about investing. Before we get into that, there are people that have kind of asked me, what does my portfolio look like? So I will, and I kind of wrestled with this idea for a little bit. We kind of discussed it, right?
Yes.
Like, how much do I want to show? What is considered, like, what's my privacy versus what do I show? And what I've really come up with is the portfolio that I created. It's the $250,000 portfolio that I created in 2022. That one, I'm thinking maybe that's the YouTube portfolio, right? And then I have my own personal portfolio, which I'm not going to show. So the YouTube portfolio is fairly new, 2022, but I feel like the portfolio is starting to mature. It's building itself out. It's almost up to 300K right now. So it's a decent sized portfolio that I think if I show it, it'll kind of represent what I am as an investor. Right. It's different from my personal portfolio, but there's a lot of similar positions. So I'm going to show that on the screen. And you've noticed there are some positions that are blacked out. Those are positions that I don't feel like they're smaller cap companies. They're riskier companies in theory. They can move up crazily or move down crazily. Those are companies that I blacked out. I'm not going to show my options. These are just my top positions. These smaller positions, I don't really feel a need to show because they're small positions. But yes, this is my portfolio. And you may notice looking at it, if you watched my CROX video from many months ago, that my CROX allocation is bigger. In my old video, I talked about how I have a 2.5% allocation to CROX. Right now, the allocation is up to 6%. So that's almost like I've more than doubled the position, right?
Yes.
So that kind of shows like, oh, Dennis is excited about CROX.
Yeah.
And I'm excited enough to make a video about it again, right? And include her. How were you introduced to CROX as a non-investor? Because I'm an investor. I've researched the history of CROX.
Yes.
You're a non-investor.
Yes.
So, talk to me about CROX. Like, how have you interacted it throughout your lifetime?
So I remember early 2000s, I had my first pair of CROX. I was like 4 years old. And I remember CROX was in like a big deal. It was just like a small, store. And yeah, I remember buying those CROX, and then one day the store just disappeared. Like all of a sudden they disappeared.
They straight vanished.
They were just gone. And all of a sudden I was like a freshman in high school, and they just started popping off. Like everyone just started wearing CROX, like everyone. So then I bought a new pair of CROX, and then I just kept buying more and more and more. And I just noticed everyone just started wearing CROX again. And it just became this huge, like, almost like a fashion statement. So you can decorate your CROX in so many ways. And there's like so many different
styles, right?
Yeah, styles, collabs, gibbets, like different little charms you can put them in, like just make them like your own design. So yeah.
I agree. I think that I don't know how long people are going to keep calling CROX the ugly shoe, because to some extent I almost see some CROX and I think, hey, that's really cool. Like my favorite pair, there's like the Echoes. Like I'm looking at the Echoes and I honestly think they look really, really cool. There's a little bit more than meets the eye for CROX now. And I mean, one of the CROX that I saw, it was like this one you can open a beer with it, right?
The fishing CROX.
So it's pretty funny. But Anyway, let's go ahead and get into the investor presentation. If you want to catch the full analysis of CROX, I'll link the video up here or there, wherever it is, so you can watch the full analysis. I'm not going to go over that again.
Yeah.
But I just kind of want to review the quarter. So this is for Q1 2024 investor presentation of CROX. And I want to take us to this slide over here. So this is the Q1 highlights. And I mean, like, after the earnings call, CROX's stock just went up. And like, someone before that, one of my friends asked me, "Hey Dennis, do you think CROX is going to go up or down this earnings?" Right? And to my friend, I told him, I don't know. It could dump another like 15%. It could jump 15%. I have no clue, right?
Yeah.
And it went up like a lot. So I think what ended up happening is finally, Hey Dude is priced in, right? For like the whole last year, like there's like 2 quarters where Hey Dude dragged the CROX stock. It just dropped like crazy. And this quarter, Hey Dude looks terrible. I mean, let's be honest, right? Revenue is down 17%. I mean, it's just terrible looking, right? But the market has finally said, okay, we don't care about Hey Dude. It's priced in. We understand that Hey Dude is not as good of an acquisition as everyone thought. Okay, cool. Let's move on. That's kind of how the market felt. Move on, right? But what I'm interested in is that 16% revenue increase in CROX. Just absolutely ridiculous. Like, the brand continues to be strong, and it's just ridiculous, you know? 16%, if they keep on going at this rate, right? If they keep on going at a 16% increase and whatever else they're doing, like, the market eventually has to price CROX differently. Right now, it's priced like this stock is just gonna fall off, right?
Yeah.
But they have to price it differently. So, I mean, just incredible quarter. Pretty happy with it. And again, the market is pricing Hey Dude for failure. But what if Hey Dude's not a failure? So the other weekend, like, I actually went to the Hey Dude store with her, and I mean, I finally pulled the trigger and I said, okay, I'm gonna buy some Hey Dudes.
Yes.
So
join the club.
I bought 3 pairs, and I mean, yeah, I mean, there's more styles of Hey Dudes than I realized. So I was actually like, hey, this is not bad. The price of the shoe, not bad at all. And I mean, one of the other things about CROX is, I mean, their management team, they're like, we'll go to this slide. I actually want to show a different slide here. And this is something that I was impressed by. It's this slide over here. So inventory down 18% year over year. The reason why I'm impressed by this slide is because the management team literally told us that this is what they're going to do, and they did it. And as an investor, you have to take a look at your company, right? You buy your stock or you buy your company, and each quarter that goes on, you have to kind of monitor them. You kind of have to go, okay, what's the integrity of the management team, right? You look at a company like Intel, they say they're going to do something, it doesn't happen. We're going to do this, the deadline, they push it back. We're going to do this, they keep on pushing it back. That's a company that, you know, I struggle with, right? But a company like CROX, where they're saying, we're going to do this, and they actually do it, that's when you reward the stock, right? You want to, you look at these companies, you're like, okay, they're actually doing what they're saying they're going to do.
Yeah.
And one of the things that they said, not related to this, but sort of related, is they said that they're going to have substantial, they're projecting some increases in Hey Dudes at the end of this year, around Q4, right? So we're like, okay, the market's not pricing that in. But if they can execute on that and Hey Dude actually, they can build out Hey Dude, that's actually be really positive, right?
Yes.
And we went to the Hey Dude store. I talked to the manager because the Hey Dude store looked like a skeleton store, right?
Yeah.
I talked to the manager, and he pretty much said, in December, we're planning on becoming a full-on store. We're going to sell all these different other merchandise, not just shoes. They're going to sell other things, t-shirts and whatnot. And to me, I was like, you know what? That kind of matches the timeline.
Yeah.
You know? So I was like, okay, that's... I feel good about the future of CROX and Hey Dude, right? I was like, okay, cool. And then this is the other thing, right? In my video from previously, I talked about one of the bear cases being the debt. And if you said, okay, 2 years ago, the debt was looking really bad, I would agree with you, right? But again, the management team said that they're going to pay off that debt.
Yeah.
And they literally did that, right? After, I think it was about 5 quarters, like in my last video, I talked about that. About 5 quarters, they took down like $1 billion in debt. So they went from 3 billion to 2 billion. And now they're at their debt like range. This is their goal debt level, So they're printing all this cash. What are they going to do with that cash? As long as they don't do another stupid acquisition and they use that cash, which is over here, they're literally saying it on that line. Our plan is to buy back shares and repay debt during 2024. Okay. They're going to buy back shares. I'm like, yeah, that's awesome. So there's really only two scenarios, barring the fact that if CROX completely gets destroyed, like if the company deteriorates, this is not what I'm pricing in. But ignoring that, as long as the company continues to print money, they either can, the shares stay low and they just buy back shares, and then they just keep on buying back and buying back and buying back, which just doesn't make sense because the market will reprice that eventually, or the market begins to recognize that this company is not a fad. This is a company that is here to stay. They've cemented themselves as a strong brand. Either way, they're going to reprice the stock. So, I mean, even right now, like when I was buying the stock, it was a single digit multiple. Right now, the stock is trading at like a 10-ish multiple, which is not bad at all.
Yeah.
Still fairly cheap stock. I mean, I'm cool with that. But overall, when I was thinking about my investment in CROX, before the earnings, I bought more. Because I was looking at it and I was feeling fairly bullish. So I was like, okay, you know what? I want to buy more CROX. I want to be more exposed to this idea. And that's something that I need to say. This is kind of off topic from the video, from the CROX analysis, but I need to say this as investors. Some investors, we struggle to average up on our positions. Because what I want to show, like I just showed you my portfolio, right? Like all those positions there, my cost average is one of the things that I want to show. If I have a lower cost average, it makes me look like a better investor.
Yes.
And that's what a lot of YouTubers are doing right now. You know, you'll see some YouTubers, they have like a low cost average and that's what they show. And they're like bragging that they're a good investor. But then like I'm seeing some YouTubers, like if they really believed in that idea, they would be averaging up.
Yeah.
They'd be buying more. You know, they'd allocate more to it. And that's what I'm doing with CROX. And I think like it will make my cost average look worse, but I'm making more money. So to me, that's more important, right?
Yes.
But I guess to other YouTubers, it depends because some YouTubers, they make their money from views and from their selling courses and they lose money from investing. I don't make money from YouTube. All my money I make is from actually investing. So it's a different angle and a different approach. But as an investor, as a viewer, I say if you have a company and it's performing well, even though it will hurt your cost average, you should be averaging up on those companies because that's how you make more money. You can't just buy a stock and watch the stock go up and then all of a sudden because it's up, you don't feel like buying the stock anymore. It's okay to ruin your cost average because you're going to make more money. But I mean, that's really it with CROX. I mean, we're just monitoring the performance of it and I'm a happy shareholder. Before I show you the video, I just want to kind of react to this. This is kind of dumb. I mean, this is from my previous video. Oh God, this is dumb.
Are you ready, Ski Dad? Time for the light round clears. Everybody start with Brandon in New Jersey. Brandon.
So I was...
How long did that take you? Do that?
I don't even know. That was really stupid. Okay, so yeah, I mean that's the end of CROX. This is the video if you want to watch it, but let's jump into SBUX. So I just want to preface this by saying that a lot of the stuff that I'm going to show for SBUX, it looks very negative. But if I'm being totally honest, before I even show it, I'm actually quite positive on the company. I'm not currently invested in SBUX. I'm looking at it as a potential investment. I mean, there's a lot that I'm going to show. There's a lot of negativity, but I just wanted to make it clear there are definitely a lot of positives about SBUX, and I'm going to talk about that after we go through the negativity. But I mean, let's just start with this. This is like the lightning round, dude. Jim Cramer.
Yeah.
So let's start. We're going to react to this, and I mean, if you haven't seen this interview, it's a banger.
Gentlemen, when we look at the biggest loser today, it's going to be SBUX. It's among the worst performers in the S&P 500. It's down double digits. Company posting quarterly results that I would say would be substantially below street consensus and cutting its full-year guidance, one of the biggest guidance cuts I've seen in a long time. Joining us now exclusively is SBUX CEO, Luxman Narasimhan. Mr. Narasimhan, it's good to have you on the show, and I appreciate that you're coming on, despite the fact that the quarter was extremely weak.
Jim, it was a very tough...
the way he introduces him, he just like completely, he just like, bah, 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 he's like destroying him. He's like, I'm glad that you're here, even though the quarter was extremely weak. And
That's his introduction.
that's his introduction. Like imagine if I introduced you like that in the beginning of the video. like thank you for coming on, even though last time when you showed up in the video you looked extremely dead.
Yeah, that's what you mentioned earlier.
Okay, maybe I did introduce you like that, but I just like he goes about his introduction, but I'm gonna skip to about a minute in. This is kind of where we're gonna start. I mean, yeah, let's just
now. What I'm trying to figure out, sir, is why did you not feel the need to pre-announce this shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that. And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
I think, Jim, we've been working on action plans to address
look at that stock price.
These headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual. And I'm happy to talk about them.
Well, let's
pretty much what he said here is he's kind of asking, right? He's asking the CEO, he's saying, okay, your CFO said that we're gonna do incredible.
Yeah.
But then they actually did completely terrible. Why did they not feel the need to announce, like, why did they feel the need to, like, correct themselves?
Yeah.
Instead, they didn't pre-announce it. They just did the earnings call. It's like the market was just completely in shock. They dropped the stock like crazy. And right now, one of the narratives that people are talking about is they're saying, like, okay, Starbucks said that they have a plan. They didn't want to mention the plan. They didn't want to mention this because they want to mention it during the time when they had a plan.
Yes.
But they did such a terrible job explaining their plan that nobody knows what the plan is. Like, I'll be honest, the narrative right now, if you look at all the YouTubers, all the analysts, everybody is saying Starbucks is going to die or something similar to that. Starbucks' future is bleak. They're saying all these different things. They don't know. There's actually a plan. And he does a terrible job explaining it. I'm going to just say that CEO, absolutely abysmal job explaining the plan. He just keeps saying, oh, we have value. There's value here, value there.
There's an action plan. Action planning. You can do like a count.
Right.
You can see how many times he says that in the whole interview.
Yeah, but I mean, there is a plan.
Yeah.
But it's just like, he doesn't do a good job saying it. He just says, but there is a plan, just saying.
Let's finish because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about, I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the US occasional customer, they've clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong, but there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it is it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks app and join it. On the app, what you will see is you will see value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you're seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide. Our loyal
Why
customers.
did the loyalty program go from 34.3 to 32.8 in late quarter?
He's such a savage.
Just cut him off like right away.
Why did your membership, and I know your membership was up 6% year over year. I'm not concerned with that. I'm concerned with linked quarter. Why you had not the occasional, but the hardcore drop off.
Jim, if you look at the most.
He's such a, like, this interview, Kramer, like normally when we talk about Jim Cramer in finance, we meme on him. He's a meme. You know, he seems to always make the wrong call. I mean, like there's some really funny calls he's made, but like honestly, he was really on point for this one. He's just like he's saying like I guess he called out Starbucks for talking about they lost some sales because of weather.
Yeah.
And he's saying all the other local chains, all the other coffee stores, they did not lose customers because of weather, but you guys did, right? And I mean, this is a weakness of like, it's not a weakness of Starbucks, it's more so a weakness of the management team's ability to communicate.
Yeah.
Because they're communicating that, oh, it's the weather. They're not taking responsibility for why their sales went down. They're just blaming other things. The weather is the reason why our sales went down. And it's just not a good explanation. I mean, okay, so you as just like a non-investor.
Yes.
I mean, what have you seen in the Starbucks app? I mean, I know you don't go to Starbucks often, but your friends like Starbucks.
Yes.
I mean,
so the big thing I noticed with Starbucks is they do have deals. I think it's either, I'm not sure if it's Tuesdays or Thursdays that have like the buy one, get one 50% off, which is like, okay, that's good. They're driving people more in. And Starbucks is always packed. You look at the driveway, there's always people lining around the freaking stores. I noticed Starbucks doing the collab with Stanley Cups. That's
that was big.
Very big thing.
I think the big thing here is that they're mentioning a lot about their app, and their ecosystem, right? And we talked about this, just like Starbucks' app is it's their crown jewel, in my opinion. Like that app is incredible because once you put your money into that app, it almost functions like a bank. I think I remember you mentioning like, okay, I went on the app and I looked at the app, and if you use a gift card, you get more points.
Yeah.
Right. So they really have all these incentives where they get you onto the app and you get points for it.
Yes.
I mean, I just think it's an incredible value proposition there. If they can get more people onto the app, then that's where they solidify their moat. That's one of the things.
Yeah.
But let's keep moving.
Pop off.
Jim, if you look at the most loyal customers, they actually continue to come in, they continue to buy us frequently, they continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it, the folks that didn't come back. They, again, are very similar to the occasional customers. We have an action plan in place right now to communicate directly with them with offers that have gone out even as recent as this week in order to ensure that we can reverse the visitation losses that we have seen with them and to bring them back. And yes, you're right. Overall program did grow by 6%.
Right, that's necessary. But what's more important, I think, is the linked quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir. You are still expanding as if it is business as usual. You add, for instance, on the quarter, you talk about opening stores in Honduras and Ecuador. Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
Jim, thank you for the question.
So, I mean, like the way that the CEO responds, like, look.
What I would tell you is, if you look across the world, our system sales in Latin America expanded double.
So pretty much the CEO responds by just cherry picking data. Kramer here, he's really on point. Like he really is. And that's something that's hard for me to say as an investor. That he's on point. I think that he's over exaggerating to some extent, and everybody else in general is over exaggerating about the terribleness of Starbucks. He's saying like this is perilous to your existential existence. Like he's almost saying like Starbucks is going to go bankrupt.
Yeah,
that's an exaggeration. Let's be honest. Starbucks prints money.
Yes.
The business in coffee is cheap. Right, it's just cheap. So for them to like, they're still turning a profit. Every sale that they make, they're turning profit still. So let's not pretend like they're gonna go bankrupt.
Yeah.
Right. So I will say that his point here is really on point. And I'm just thinking about Starbucks. Like when we drive, we see like 4 Starbucks in the same road.
Yeah, it's kind of crazy.
Like, is that necessary?
Yeah.
It doesn't seem like it's necessary, right? I will say one of the action plans that they do have, which is not mentioned in this interview at all, it's mentioned in the earnings call. So if you want to invest in Starbucks, you want that to be something that's part of your portfolio, I would say listen to this earnings call and make a judgment for yourself. But for me personally, I listened to it and they do have a plan there, right? They're closing down some stores.
Yeah.
They're also making some 24-hour stores. I think that's really good because certain areas, like something that's really busy, I can imagine people would want to go to a 24-hour store.
Yeah, like
So-
nurses, for example, like in my local hospital, there's a Starbucks right next,
Mhm.
like down the road. And you got your night shift nurses and they're working like 12 hours and
Yeah,
need some
right.
caffeine to, stay awake
Right,
during
right, right.
those times.
Right, exactly. So, and airports, that's another one, right?
Yeah.
You might as well have
Yeah.
a 24-hour airport. So,
Mhm.
so if they're closing down some stores, on top of that, they're also opening some drive-through only Starbuckses. And
Yes.
apparently, those are quite profitable.
Remember, okay, so we were going to Starbucks and we were going to go inside the store and we get there and it's just the drive-through. We're like, where's the store? Like, what is this? And they're like, no, it's just drive-through. We're like, oh, okay.
Right.
And so we just, it's so weird.
Yeah, because I like Starbucks cups. I collect Starbucks cups, so I wanted to go there to buy a cup, and it couldn't even get inside. I was like, "What is
They're
this?"
like, it's just a drive-through. And we're like, what? What do you mean drive-through? It's always so
But
weird.
Looking at that, they're actually more. Their margins are better.
Yeah.
So I was like, okay, you know what? That's actually good. So Starbucks is pushing for efficiencies. Contrary to what this interview says, they don't represent it at all. It's terribly represented. It's just a terrible interview. But just moving on, he gives his own very businessman answer to it. I'm like, okay, cool.
Holding share, sir. I regard them as being seminal companies.
Oh God, this one's
Still the
good.
largest player in out-of-home coffee. If you look at some of the metrics that we
Dunkin'
have,
Donuts, Tim Hortons said you are not holding share, sir. I regard them as being seminal companies that are just as good when it comes to McDonald's says you are losing share. I can't go against those
Look at
three
his
companies.
face.
They are too good and too honest and too big for me to dismiss.
we are the leading category player in coffee.
It's just like he's like copying and pasting his answers. He's like a robot. Like Jim Cramer says something to him and he responds, "We are the leading," like, geez, like pretty much Cramer just called him out for more BS. He's saying, okay, so you're saying the economy is weak. That's pretty much what the CEO said. The economy is the reason why people are not buying Starbucks anymore, right? People aren't buying and the economy is weak. But then Kramer says, we looked at Tim Hortons, we looked at Dunkin' Donuts, we looked at McDonald's, and they're not reporting anything like that. Only you are.
Yeah.
And that's a very valid point. I mean, like, Kramer is a savage here. Like, I've never seen him on point like this before. Like, that is incredible. But, like, Kramer's correct here, too, you know? So what's going on here? Well, maybe they are pricing their coffee a little too expensive.
I think so, because if you want anything extra, it's an extra 50 cents, 25 cents. And then that does go up. So maybe that could be an issue, because I don't know if other coffee companies
might.
operate like that. I'm not sure, but
Mhm.
for sure Starbucks, I know they do that.
Right.
Charging up extra stuff like cold. So
I mean,
like that.
other coffee places do that. Like, you look at McDonald's, you know, you want some vanilla in your latte, there's going to be an extra charge for it. So they probably do that, but like still,
I
they
think they take it a little bit
too hard.
too
right?
hard, yeah.
Right, I see. But I mean, it's fine. You know, people are still buying it.
Yeah, they still buy it.
But yeah.
I'm talking visitation share and what we have. If you look at our in-home coffee business, it grew share 140 basis points. But if you look at the business underpinning us, tea grew 8%, cold grew 1%. So there are elements in here. If you look at our partner sentiment and what we have inside stores, attrition is down to its lowest levels. So there's work going in. The thing we didn't do enough of is really attack the occasional customer with delivering and communicating value to them in a more aggressive manner. That's what the plan we have does.
Luxman, it's David.
He always alludes, this is the plan, but he doesn't actually say what the plan is.
Yeah.
And I feel like that's the shortfall for this interview, because I mean, it makes him look clueless. It really just makes him look clueless. And I think that's what a lot of people are kind of accusing the CEO of. Like, either he's like, it sounds like he's either trying to deceive his shareholders or he's clueless. But I don't think it's either. I think there actually is a plan. He's just terrible at communicating it. But yeah, I mean, this guy, he asked a question.
Slower than expected recovery. But to Jim's question again, why not sort of focus on improving things there and or fighting off the competition? You still are opening many stores. I know the net number was still a pretty significant one for the quarter in China.
David, first of all.
Yeah, so I don't know if that's really the issue because they're opening too many stores. I suppose that is true, and maybe they do need to cut back on some stores. That would hurt their revenue, but it would improve their margins, theoretically speaking. So maybe, but they're really focusing on this where they're saying that they're not doing anything. That's what the guy's asking. They are doing things actually. Regarding bringing back their customers, they're showing some sort of a value proposition through their app, right? And they are actually pursuing more efficiencies, but is that everything to say China is down? Yes, that's true. But that's the interview. So I want to just bring our attention to this. So when I went to Starbucks' website, I wanted to kind of like understand what was going on, right? Because, like you see a big brand like Starbucks' stock drop. Of course, every single investor in the world is going to have their eyes on this. Like, what happened? So, I mean, I was looking at this and I can't tell what the hell they're talking about. With strategic priorities, elevate the brand, strengthen, and like become unlock efficiency. Like, it doesn't mean anything.
Yeah.
So again, the CEO, we have an action plan. Is that the action plan? I don't know what the hell that means.
Yeah.
So again, this is the press release. It doesn't tell anybody anything. So I do not blame the investing world for dumping Starbucks' stock. But again, if you're an investor, you look for opportunities like this where you say, okay, this stock is misunderstood. And that's absurd to say. It's Starbucks, one of the biggest companies in the world. But we had Meta, for example. Meta, the stock dropped like crazy all the way down to like $80. It's up to like 500 again or something. That shows how crazy and how inefficient sometimes the market can be priced. And this might be one of those moments, right? But again, this is their strategic priorities. It looks terrible. I don't know what the hell that means. So yeah, Starbucks is not doing a good job in explaining, but I kind of want to just bring this back to a discussion of Starbucks now. So in 2022, they had multiple CEOs go back and forth. And this is Schultz. So this is, he's the superstar CEO that they have, right? So the CEO before Schultz, they mismanaged the company completely. They were buying back shares. So pretty much they took on debt. The previous CEO, they took on debt to buy back shares so that when they get more share buybacks, it increases the EPS, the earnings per share of the company, and that allows them to unlock better compensation packages. In other words, the CEO was mismanaging the company in order to get more compensation for themselves.
Okay.
So Schultz came back and he said, okay, 2022, Starbucks enters new era of growth driven by unparalleled re-innovation plan. Okay, sounds good, right? This is their plan from 2022. Let's see. Now it's 2024, just like we talked about with CROX, right? I bought the stock. I looked at what the management team said. They said they're doing it, and I buy more of the stock. Yeah. Let's look at the plan from 2022. What do they have? So they have a roadmap here. They said they want to deliver an annual, same annual stores of 7 to 9% growth, like revenue growth of 10 to 12%. They are not anywhere near. I think their revenue growth is negative. I think the growth is negative, and I mean, like, it just doesn't look good. They're not delivering on these numbers. So Starbucks right now is behaving like a growth company. They're talking about this is the growth plan, right? They're all over the world already.
Yes.
What growth company? They're building more stores, right? But here's the reality. Starbucks has more stores than McDonald's.
Yeah.
And I think that's absurd, crazy. Right?
Yeah.
So I think it is time for them to refocus to some extent, right? Because they're behaving like a growth company still. But I don't think they're a growth company anymore. That's absurd for me to say because as an investor from years ago, I've always thought about Starbucks like this is a growth company. I've always thought about that. Starbucks is a growth company. That's just something that I've known. And it almost seems like they're no longer a growth company. And that's a tough pill for me to swallow, but it's something that they have to swallow too. They might not be a growth company anymore, which means they need to behave differently. And I don't know if the current CEO is the right CEO to lead them through this transition. But I mean, that's just one of the risks of investing in Starbucks, you know, because they have this plan here, accelerated EPS, revenue. They're not even meeting any of these goals. So, and the CEO sounds like they're still trying to meet these goals. It might be time for the CEO to highlight a new plan. But that's just me. So overall, I just want to, I have some notes here because these are some points that I want to hit on. But this is from the earnings call transcript, and they say this. Additionally, we saw meaningful reductions in product and distribution costs, driven by supply chain improvements in procurement, transportation, and sourcing. They are significantly higher than we initially thought, and we're ahead of our plan and savings. Through work today, we have the confidence that we need to extend our goal from 3 billion of added efficiencies over 3 years to 4 billion of added efficiencies over the next 4 years. So that's going better than they expect, right? So they do have plans. It's just so terribly communicated. The CEO mentioned nothing like that, you know? As a result of our investments and focused efficiency efforts, partner turnover reached a new low in the quarter. Store manager turnover also improved, and we beat the industry benchmarks by a wide margin. So Starbucks pretty much knows they can't just keep hiking their prices. And they have all these special sales. They're trying to bring people back. There is actually a plan. It's just not communicated well. Overall, I think what I think about Starbucks is there are so many different things that people are talking about negatively about the company. Unionization, macro seems to be a big issue, but macro is an issue for everybody. International expansion, that sounds like there might be an issue. Some people are afraid of China. The China expansion, because Starbucks is trying to expand in China. They have like a 11% revenue loss in China or something like that. The CEO, he looks clueless. The Starbucks' moat and brand, is Starbucks' brand eroding? There's all of these negative things. And honestly, I don't think most of those things are going to destroy the company. It's just things that everyone's saying negatively. In fact, like, I think now if you were to ask people, what do you think about Starbucks' coffee? They just randomly ask people. They're probably going to say, oh, the coffee tastes terrible. Does it? I'm drinking Starbucks coffee. I think it's fine. You know? So there are definitely some headwinds but I think overall, throughout all the headwinds, this is a growing market still. What I mean by that, I'm not talking about coffee. What is the biggest addiction that we have right now in our generation? Caffeine, right? So like my current investment is actually in Monster Energy. So I invested in Monster Energy, not Starbucks, but they're not similar, but they're sort of similar, right? So Celsius, Monster, these are companies that are growing market share. And among that is just caffeine in general. Starbucks is among that too. So they're part of a growing pie. So we can't treat Starbucks like it's a declining company yet. It might, who knows? I can't tell in 2 years or whatever. But right now, I see the signs of a company that looks like there may be an opportunity. So for me, I'm not currently invested, but if Starbucks continues to drop, then I might consider an investment in Starbucks. But yeah. So overall, that's the video. I hope you guys enjoyed it. And if you have any clips that you want us to react to or anything like that, go ahead and send it to me and we'll make sure to react to it. Yep. Thank you guys.